Let's give you the markets update now. The rand, Japanese yen and Norwegian krone have turned from the worst performing major currencies. This after last week's rally sparked by new economic data that suggests inflation in the United States may be cooling. Well, let's get a sense now of how the markets are shaping up. Simon Brown is founder of JustOneLap, and he gives us the update on how the JSE is performing. Simon, good morning to you. So, after being beaten down by a dormant, or should we say a dominant, there's a big correction there, a dominant dollar this year, the weakest link in the currency world seems to be staging a comeback. Simon, talk us through the developments there.
Absolutely right, Paulie. So what we've seen, and if we look at the rand, there's been a couple of own goals this year. Grey listing back in February, Lady R didn't help. We were out at 19.50 against the dollar at one point. And we've been strengthening back. To a degree, that's what the rand does. It goes out to extreme levels and then sort of strengthens back a little bit. And as you point out, the dollar's also been getting weaker pretty much for the last year or so. And certainly that inflation number that we saw last week out of the US, 3%, the target is 2%. I didn't expect it to be back at 3% until late this year. Means that the Federal Reserve in the US quite possibly can now permanently pause rate increases. We can start talking about rate cuts probably first or second quarter of next year. That brings in some dollar weakness, and that has seen a rand much stronger. As I'm talking to you now, we were trading 19.10 earlier in the day, but 18.10. We are just under 18, 17.99 and a half. So certainly that trend on the rand looking good.
Oil prices extending their decline in a second session in early trade. What are the factors driving sentiment there?
I think there's two big stories there. One is Libya has started shipping oil again over the weekend. They're not a significant player. It probably won't even be a million barrels a day. The world uses about 96 million barrels a day. But it brings some extra supply into the world. Basically, that million is what OPEC was cutting just a couple of weeks ago. And the second issue, we saw Chinese GDP data out year on year was 6.3%, which is a massive number, but the market was expecting 7.3 because, of course, there's base effect. The second quarter of last year, China was still in very hard lockdown, and they were expecting a better number there. China seems to be coming out of the pandemic and growing at a slightly slower pace than expected. Some of that is because the rest of the world isn't growing fast enough. We've seen negative Chinese export data, which suggests that the rest of the world's growth isn't really propping up China. Those two together, certainly oil a little bit weaker. We've got Brent trading 79.07. It's higher on where it was a week ago, but off those highs of late last week.
Let's talk company news. Richmond reporting higher first quarter sales. Those sales, Simon, rising by 19% in the period under review. Help us make sense of their numbers.
So these numbers were really, really strong, which is more or less what we've got used to from Richmond. Some in particular, we talk Asia Pacific, up some 40%. That, of course, includes China. We were touching on that a moment ago. Retail, really good. Their jewelry, watches, up 24% as well in constant rates. Across the board, good numbers. One area that stood out to me, the only negative on here, was sales into what they call the Americas, which is predominantly the USA, but of course some South America, some Canada at the same time. That was negative. And I have to say, the market's response is surprising me. Stock off 8.5%. I thought it was a decent number. The market obviously looking for a lot more, and perhaps some concern around those American numbers, which plays into what we were mentioning a moment ago around China and the oil price. If America's perhaps the economy not as strong as everyone's hoping. Inflation coming down, but the economy doing okay, not rocking.
Interesting developments indeed. Let's conclude with Anglo-American Platinum issuing a trading statement for the 6 months, which ended on the 30th of June 2023. Quick overview of how they're doing.
Poorly is the answer. They expect earnings to be between 65 and 75% lower. This is on the back of a much lower rhodium price and to a degree palladium and platinum. And they also had some issues with bringing a plant back into production, a smeltering plant, after doing maintenance over the holiday period, over the year end. That took a little bit longer, which meant they lost about 60,000 ounces of sales in that regard. So perhaps a little worse than expected, but we're going to see some tough numbers out of these platinum counters because of the much lower PGM prices.
JustOneLap founder Simon Brown, thank you very much for that markets update.